How can we expect the markets and maybe the economy to react? Let's bring in a guy who knows, Bob Nardelli, former CEO of Home Depot, Chrysler, and GE Power Systems and Transportation, among other things. Bob, it's great to have you on a day like this.
Thank you. It's great to be here.
So we had this uncertainty around trade and tariffs with the signing of the Phase 1. Okay? You've been a CEO, still on boards. Is the uncertainty over, or has it pretty much stayed the same despite what we expect tomorrow?
No, you know what I'm hearing from my colleagues, both big and small corporations, is they really are adapting to the certainty of uncertainty. We talked earlier about social media and the impact it's having on the market. We talked about the geopolitical, Iran. We talk about the tariff situation here. So I think corporations today, again, big and small, are taking more control over their destiny. And I don't want to say ignoring the market, but certainly doing capital allocations, certainly looking at areas of growth. Today, they have to innovate or they'll evaporate. So we're seeing much more money in trying to avoid being disrupted. So I'm really excited about 2020 and what I'm seeing both in the private equity side, a lot of the companies we have in the family office, and certainly some of the public tradings that we talked about here today. You were talking about Delta, and I think Ed is doing a fabulous job. It's probably the best airline out there. His assets
doesn't have a Boeing problem.
He does not have a Boeing problem. His assets are strong. The capital reallocation, certainly look at LaGuardia and what he's doing there. And as I go around, I do about 200 nights a year on the road, primarily with Delta. And wherever you go, he is upgrading, cleaning, and improving the comfort in the travel for the traveler. Doing a great job.
Can I ask a question? When you talk about being flexible and transforming themselves, is that a balance sheet issue of having capital, or is it a supply chain issue of not being, beholden to whatever the China-U.S. situation is? What are they doing?
Yeah, so there's no question. I mean, you talked about Jamie Dimon, and Jamie got a lot of criticism out of the business roundtable doctrine that came out. Everybody said, boy, you've reduced the importance of profitability. See, that's when people think vertically about priorities. I kind of think horizontally, that it's both stakeholders and investors, the financial investors. If you take care of the stakeholders, the employees, the communities in which we're privileged to live and work, it's going to have a positive impact on the business, and therefore the investors are going to benefit from that. So that's number one. I think number two, people are looking at supply chain. We have a bunch of companies in the family office, and we're being inundated by companies that are not in China trying to get out of China. We have a company that does contract board manufacturing, electronic board manufacturing. We've got plants in Vietnam. We got a bunch in the United States. And we're being asked continuously, how fast can you get us up? What kind of volume? We've done 5 bolt-ons this year in response to demand and volume out there. So I think corporations are understanding the importance of supply chain. You look at the big box, right? When we had the issue with China, the impact on potential tariffs brought those stocks down. You look today, they're kind of back up with that news. So whether it's Home Depot or Lowe's or some of the big box Menards, you're seeing some positive impact on it.
So, Bob, you mentioned the geopolitical, and you're talking about supply chain. If you're a CEO or an investor like you are now, are you looking to invest in the U.S., or is it still a global playing field?
Well, I think you still have to think locally and act globally, right? That's the old saying I got from my mentor, Jack Welch. So I think, but you have to pick your spots. You have to be smart about the markets you're going into. And you got to be careful if you're not going to like parts of the legalities or the governments and so forth. This is not something you move in and move out of. So you have to be forward-looking, look at the environments of where you're putting assets down, and make sure you're there for the long haul. These aren't something that you put on a barge and you move the factory to the lowest cost areas.
Bob, Senators, tonight we have a Democratic debate. Senator Sanders, he's really made some incredible strides over the last few weeks. Is he an exogenous event for the stock market, his potential candidacy for president?
Yeah. Well, I don't like to talk about particular candidates at this point. It's a little bit early. I think that, we have to see how, the independent, if you will, Bloomberg plays out in this thing, and what kind of reaction he'll get. If he spends $1 billion, can you really buy those votes? Or is the issue of the major, the center, which is going to be predominantly influencing the next election, where does he come out on that more than some of the other candidates you mentioned? I think.
Best guess for the economy this year, very quickly, Bob?
So
Recession or no?
No, I don't think there's a recession. I think we'll see a GDP between 2 to 3%.
Pretty good.
Yeah, I think it's
Not
going
great.
Not
Far
great,
from recession.
but it's pretty darn good coming off 2019, isn't it? I mean, if you're running a company and you've been up 20% last year, another 2 to 3% on 20 is pretty darn good. So I don't think so. I think GDP is 70% consumers. Consumers are strong, thank God, right? And we're seeing real solid aspirational desires of our consumer. Sure, there's some, we mentioned earlier, there's some retailers that aren't doing so well, but on balance, a lot of them are doing well. And I think it's a combination of what I'll call bricks and clicks. And if you want immediate gratification, you're probably going to try to get it online. If they can't deliver it within hours, you're going to go to a retail store and get it. So the optionality there, the omni-channel approach is pretty effective right now. And I think companies realize that. And, I just went through a doctoral process with one of the major retailers on how they're looking at price, how they're looking at delivery, how they're looking at family formation, household income, and looking at where they put these stores and the locations and what kind of SKUs they're offering online, the plethora of SKUs versus, what's representative in the store. Retail is really getting smart. The old days, cash was king. Right now, I think they have a partner. It's called artificial intelligence. People are no longer making just gut decisions. They're making data-driven decisions, and that's why we're seeing really better performance.
Thank you. Good. It sounds like oil. You don't drill many dry holes anymore. Bob Nardelli,
Yeah.
great to have you on.
Thank
It's always
you.
great to get your viewpoints.
Thank you.
We'll see you soon.
Thank you.
Happy New Year, by the way.
Happy New Year.
Karen, if he's right, 2 to 3%, how do you invest around that? That's pretty good.
I think you'd be long, right?
That's it. Stay long and strong.
Stay long and buy protection, right? Volatility. I mean, the VIX today on that one headline went up 15% in a minute. It just gives you a sense of how sensitive you talk.
So it is a bit of a
Yeah.
jumpy market.
Yeah.
It feels that way, which tells me maybe, Guy Adami, it's a little price to perfection.
Well, that's what Jim spoke to you about during your show, I think, on Power Lunch, if I'm not mistaken. So Jim made a good point. If you recall, when he was speaking to Mark, that was down some 40 points, turned around and was up 60. I think Jim assuaged a lot of the concerns out there. But to your point, people have their finger on the trigger, and I think for a lot of reasons, for good reason.